the VAG or the appreciated. I want to go back to our earlier story to do with inflation. Now we know that we ended the year at 54.1%. Joining us, economist and research lead with GCB Capital, Courage Boti, to discuss this. So, Courage, I was just making the point that it shot up 3.8%. That's a slowdown in the rate of inflation. What are you reading from these latest figures from the Ghana Statistical Service?
Yeah, good afternoon to your listeners. Definitely a slowdown, but it doesn't by any means show we are out of the inflationary pressure yet. I think for the December data window, it still very much captured the depreciation pressures we saw, because we are talking a period, second week in November to first week in December. That was very much a period of volatility in terms of exchange rate. I think there was to some extent also crude oil price pressures, and then which translated into higher export prices and all of that, affecting transport fares and general goods and services on the market. So the marginal slowdown in the rate of growth actually for this period is actually welcome. And with the sharp appreciation we saw in December and the relative stability of the CD beginning this year now, we should see much more slower growth in inflation, at least for the January and February print, and we could be on course for a peak in March. But the situation is quite fluid. We saw from March, April, May last year, the fact that inflation, the slope was low, easing, but then thereafter the depreciation process. And then in this point in time where government's ability to push through this debt exchange program, which is a precondition for securing the board approval, seems to be hanging in the balance. It appears that if we could not achieve an IMF program as soon as possible, the agitations could re-emerge soon, and that might mean more currency pressures, and record the consequences thereafter, really. So it's looking good. We could peak in March, thereabout, but then it is a fluid situation and will be driven by the market conditions at the time.
All right. That's pretty much some good news. We could peak in March, but how significantly do you think that we are going to see this decline carry on? Are we going to be at a point? Is there anywhere we can reach a single digit as it was previously, or we are asking too much?
No, single digit is achievable, but not in the next year or two. In fact, inflation could drop quite sharply if the fundamentals, I think the drivers of that inflation seem to behave well going forward. Exchange rate is a big factor, fuel price is a big factor, but of more concern is food prices, really. And you can see at this point in time that the dominant driver in the inflation is food inflation. What interventions are there to boost the supply side, at least for food on the domestic market? I mean, those things will not yield results immediately, really. And so you could say that even if those key drivers like exchange rate, like fuel prices, seem to behave properly going forward, the supply side, especially for food, needs to respond as quickly as possible. And that is why, base effect notwithstanding, you could see inflation still in the double digits in 2022 by the time we end 2022, and could only probably be approaching the single digits again maybe in 2024 or sometime in 2025. Definitely we will get there. It has to do with the sustained monetary policy stance that helps to bring back or tame the inflationary pressures. And we are looking forward to what the Bank of Ghana may be doing till we've peaked, especially now that growth is challenged and there is a need for some support for growth. We will be looking at keenly at what the Bank of Ghana will be doing in that time, because it will be key in bringing down inflation sharply to the single digit again.
All right. So finally, in a minute, if you can, what should be the strategy to maintain this decline?
Well, the strategy will be that on the government side of things, we avoid the monetization of the deficit. It was the big issue in 2022, and it is so because we couldn't raise enough revenue from taxes and all of that, and the domestic market too wasn't available to support the government in terms of development and all of that. So we've depended on the Bank of Ghana for a lot of deficit financing. That in itself is inflationary unless there is some strict sterilization, which I dare say wasn't exactly the case. And so going forward with stricter discipline under an IMF program, we should be able to cut back on our expenses, consolidate a bit more, and that can tame inflation on that side. Then we sustain interventions on the supply side to produce some of the things like your rice, your poultry, and some of the other staples that Bank of Ghana now have withdrawn forex support for. Really, those things still need to be managed, their supply on the market. How do we boost domestic supply to meet them so we avoid the exchange rate effect, really? And so
Okay.
those will be some of the near-term interventions that can help bring back inflation to the normal levels we are used to.
Good to see you, Courage Poti. Happy New Year once again. We'll talk sometime later.
Sure, many happy returns.